Good afternoon. Welcome to Halftime Report. I am Reema Tendulkar. With me is Mangala Malu. It's a very strong rebound that we're staring at this morning. After plunging nearly 500 points on the Nifty in the last two trading sessions, the Nifty has rebounded 200 points as we speak, holding above that 15,500 mark comfortably, and we are a part of a global equity recovery. Gains today are led in many of these Tata Group stocks. So the top two Nifty gainers are Tata Steel, Tata Motors. This is after the comprehensive victory of the Tata Group over the Shapoorji Pallonji Group as delivered by the Supreme Court in its verdict today. But there is green on the screen, so you've got gains in many of the metal names, like Hindalco is higher in trade. In the auto pack, you've got Bajaj Auto. FMCG is not left behind, so HUL is climbing higher with a near 2.5% up move. In fact, as we speak, Mangalam, there is just one Nifty stock, that's Power Grid, which is currently in the red, and even the advanced decline ratio is very strong.
Absolutely, Reema. The interesting part is the ferocity of the plunge that you spoke about over the last couple of trading sessions. The 500-point decline that we saw in the Nifty has left a lot of headroom before the resistances kick in. The Nifty 50-day moving average is close to that 14,765 mark. The 20-day moving average, 14,850 odd mark. So that leaves a fair amount of room for the markets to go ahead. And the ones that are moving are actually the ones that fell the most. The high beta names, the likes of auto as well as financials. But FMCG definitely is seeing a fair amount of safety buying, if you must, the index at the high point as we speak. But we have for you lined up a very interesting discussion, the impact on the tax expenses of companies based the goodwill that they have on their balance sheets and the announcements that were made in the budget. All of that and more with Nisha, who joins in, and a couple of experts. Nisha, over to you.
Thanks for that, Mangalam. Yes, it is a very big topic of discussion. Tax outgo of the companies by way of the depreciation benefit claim that they can make on the goodwill that either they have on their books or they purchase henceforth through various transactions or through slump sale is a very, very big point of discussion. The budget proposal had some changes and the amendments take it wider. Let's understand the entire debate, because goodwill depreciation is something that is now relieved from the intangible asset as a block by the finance budget. But what does it mean for the companies? And remember, here the companies which are impacted are any company worth its salt with some goodwill component on its balance sheet. Let's take it straight across to Ajay Rotti, the partner at Dhruva Advisors, who joins us on the show to put some insights on this particular aspect. Ajay, so good to have you on CNBC TV 18. First of all, there is a lot of debate amongst the tax experts as well as the CFOs of the corporates. Many have been writing to me about this particular confusion on whether or not any goodwill depreciation benefit can be claimed or not.
Good afternoon, Nisha. I think, there are two things that we have to look at here. One is really the fine print and what amendments have been brought in. And the amendment that's been brought in is simple, like you just said a minute ago, that goodwill as a class of asset has been taken out from intangibles to be eligible for depreciation. Now, what did create a little bit of a confusion is what is written in the memorandum to the finance bill, which is really explaining why this change is being brought about. And in that, there is a discussion about a Supreme Court decision which had allowed goodwill. And thereafter, there is a discussion about how there is probably a valid reason for a claim on a purchased goodwill, but may not be so much on goodwill created at the time of corporate restructuring. But then they go on to say that goodwill as an asset class actually only appreciates and it never depreciates, because if a business does well, goodwill appreciates. And therefore, they go on to say, we propose to bring in amendments to deny depreciation on goodwill. So there is a bit of a discussion on this difference between purchased goodwill and goodwill created at the time of corporate restructuring. But the law, as it's been amended, just very simply takes out goodwill from the list of assets eligible for depreciation.
Ajay, so here the point that you mentioned, that the memorandum has a different definition altogether, has a different aspect also covered, which throws in that confusion. I want to bring your attention to this particular definition of block of assets, which has been amended to exclude goodwill. Does it mean that if we don't recognize it as a block, then in terms of intangibles, as individual intangibles, it can still be claimed? Give us more perspective on that.
Right. Nisha, Income Tax Act recognizes the concept of block of asset. So there's no individual asset once it goes into a block. And there are broadly two kinds of assets which Section 32, which is really the depreciation section, recognizes. One is tangible assets. The other is intangible assets. Tangible assets has all your plant, machinery, motor car, furniture, etc. And intangible lists down, franchisee rights, business rights, commercial rights of similar nature. Now, goodwill has been excluded from this second category of intangibles. It says intangibles will be all of these, but not being goodwill. Therefore, if it is not the entire block as goodwill, but if there are individual categories which talk of franchisee rights and such other rights, that I would think remains unaffected. What is affected is only what is purely goodwill.
All right. So you're differentiating between the block as well as individual recognition. Which are those aspects? Can you just mention and highlight which are normally used in business operations?
Yes. So, Nisha, there is no guidance, or there's nothing in the section relating to depreciation on this. It's a very wide section to say intangibles are eligible for depreciation. Now it's been changed to say not being goodwill. Now, if we just take some guidance from another provision, which is in transfer pricing, and I will not get too technical on the sections, etc., but that has a list of categories of intangible property. And it talks of, customer-related intangibles. It could be your list of customers, customer contracts, business related like franchisee rights, list of your dealers, vendor contracts negotiated at a vendor price, employee related intangibles such as employment contracts, union contracts and things like that. So there are a lot of categories there, and that also lists down goodwill. So, essentially the Income Tax Act recognizes the fact that intangibles are many and goodwill is one of those. So if today somebody were to acquire intangibles, which are in the nature of these other things, which is human capital related, employment contracts, customer contracts, list of network, dealer networks, and things like that, those identified separately would still be eligible for depreciation.
All right. So that's the view coming in from Dhruva Advisors. But one more important aspect is that it is slightly retrospective in nature. It kicks in from April 1st, 2020. Here, Ajay, very quickly, first of all, from which year now the companies stand to get affected? So therefore, the goodwill which was earlier recognized will cease to be recognized anymore going forward, and it will have a retrospective impact. On the other hand, what about the unabsorbed carry forward for the loss-making companies?
So, yes, even the goodwill recognized in the past will not be eligible for depreciation. Clearly, that's been clarified. Now, on unabsorbed depreciation, it's still open. There is absolutely no guidance on what happens to that unabsorbed depreciation, which relates to the past goodwill which you claimed. Now, as per law, it becomes the current year depreciation. Therefore, there is a bit of, there's no clarity on whether it will be available or not available. I think that's one piece which will be open for litigation, could lead to certain litigation. Good to for the government to clarify that whether it is eligible or not eligible.
All right. So there is more clarity required, but there is a room for also claiming depreciation benefit on goodwill in certain categories, is the word coming in from Dhruva Advisors. It's not like slam dunk, one hit on the entire goodwill that the companies have accumulated. Thanks so much, Ajay Rotti, for getting us more insights on that. And with that, we will also slip into a short breather on Halftime Report. Get back for more action on markets as well as news of the day.